Hi, my name is Gervais, Chief Economist at Farm Credit Canada, with a brief commentary on the decision of the Bank of Canada to cut its policy rate by 50 basis points today. So not necessarily a surprise. I would say for the most part, financial markets expected this quote-unquote supersized interest rate cut by the bank. This was driven by a low inflation statistic of 1.6% recently, as well as the belief that the Canadian economy is slowing down. So to prevent inflation from drifting lower, the bank felt that they needed to step up and implement this 50 basis point rate cut. Now, going forward, a couple of things to monitor. One is the decision 2 weeks from now from the U.S. Federal Reserve with regards to their own interest rate. And then also there's another Bank of Canada decision before the end of the year in December that we're going to have to monitor to see if whether or not the bank continues with quite a bit of stimulus in terms of a cut of 50 basis points, or do they revert back to their more conservative approach to lower their rate by another 25 basis points? When it comes to borrowing costs, I think businesses need to be thinking as well of what's going on in the bond markets. So despite the quite obvious signal from the Bank of Canada that they're going to bring their interest rate, their policy interest rate down, we have not seen long-term borrowing costs break the resistance that they've kind of tested for most of 2024. So for the most part, unless something drastically different happens in the Canadian economy, that the belief is that the Canadian economy not only is going to slow down, but slow down more than is currently expected. So unless we see this, I would argue that for the most part, the long-term borrowing costs are probably going to evolve around where they're at currently. And so we're not likely to see major changes when it comes to, for example, a 5-year mortgage rate. Short-term borrowing costs will continue to come down as the Bank of Canada implement their rate cuts. But for the most part, I think we've seen over the long end of the curve, we've seen long-term borrowing costs come down as much as they can and will, unless something more information comes in so that we have a belief that the Canadian economy is struggling a little bit more than what is currently the assessment right now. So for more information, I encourage you to go to our website at fcc.ca/economics.